Financial statements and their analysis. We all know that financial analysis is the process of identifying the financial strengths and weaknesses of the firm by properly establishing relationships between the items of the balance sheet and the profit and loss account. In this lesson, we will discuss the horizontal and vertical presentation of financial statements, the uses and limitations of financial statement analysis, trend and structural financial statement analysis, and comparative and common size statement. After going through this presentation, you should be able to explain the horizontal statement, discuss the vertical statement, explain trend analysis, describe the comparative statements, analyze the common size statement, and limitations of financial analysis. Horizontal analysis is facilitated by showing changes between years in both dollar and the percentage form. A sample structure of a balance sheet and profit and loss in the horizontal form is given in this slide. Horizontal analysis can be even more useful when data from a number of years are used to compute trend percentages. A sample structure of a balance sheet and profit and loss in the vertical form is given in this slide. Vertical analysis focuses on the relationship among financial statement items at a given point in time. A common size financial statement is a vertical analysis in which each financial statement item is expressed as a percentage. Trend analysis is also termed as intra-firm comparison, wherein financial statements of the same enterprise for 2 or more years are compared. Methods of trend analysis are trend ratio. In trend ratio, different ratios which are discussed in a later lesson are plotted against time and trend is observed. This gives insights into the pattern and direction of a particular aspect of the firm. Second is graphical presentation. In graphical representation, trend of any accounting parameter or ratio can be graphically presented against time, normally years. An analysis of percentage financial statements where all balance sheet items are divided by total assets and all income statement items are divided by net sales or revenues. In order to achieve the objective, the management should compare its current performance with the performance of previous year and identify the plus and minus points of the business. Common size financial statements are particularly useful when comparing data from different companies. In balance sheets, all items are usually expressed as a percentage of total assets. Comparison of financial statements can be made if information of all the statements is uniform. This is why common size income statements and position statements are prepared. Every item of income statement or position statement is expressed in terms of percentage of its important heading. Limitation of financial analysis. First is absence of standard universally accepted terminology. Financial analysis does not have standard universally accepted terminology. Different meanings are given to a particular term. Second is ignoring price level changes. Change in price affects cost of production, sales and value of assets, and as a result comparability comes under doubt. Third is ignoring qualitative aspects. Qualitative aspects like attitude of management, culture of the organization are completely ignored in the analysis. Fourth is financial statements are affected by window dressing. The management tends to display a rosy picture of their organization. Fifth is financial analysis is only a tool, not the final remedy. Analysis of statement is a tool to measure the profitability, efficiency, and financial soundness of the business. If we have understood the various concepts discussed in this lesson clearly, structural analysis is dynamic in nature. Right or wrong? Wrong. Trading account and net profit or loss account together is known as income statement. Right or wrong? Right. Trend analysis is dynamic in nature. Right or wrong? Right. Before we end, let us briefly revise what we have studied so far. Financial analysis is the process of identifying the financial strengths and weaknesses of the firm by properly establishing relationships between the items of the balance sheet and the profit and loss account. Balance sheet and profit and loss accounts are the basic financial statements. Balance sheet is also termed as position statement. An efficient management should not be satisfied with the present performance, but should try to discover the possible profit earning possibilities of the business. Trend analysis is also known as horizontal analysis because each accounting variable is placed horizontally. In spite of all significance of analysis of financial statements, it has the following limitations. First is absence of standard universally accepted terminology. Second is ignoring price level changes. Third is ignoring qualitative aspects. Fourth is financial statements are affected by window dressing. And financial analysis is only a tool, not the final remedy.